It's a Christmas holiday around the world, and I'm trying to get a sense of what the weather conditions is really like in London as we speak. Let's get my colleague Simon Puse from our London studios to have this chat. It's been quite some time, Simon. So let's start with the weather.
Yeah, good morning, Bosun. It's not too bad today, but I think what you're hinting at is maybe Boxing Day yesterday and the Boxing Day sales, which are a big thing here in the UK, as they are across the world. But the weather yesterday really appalling here in London and across the UK, really. And Boxing Day sales were yet another big disappointment for struggling high street retailers as a result, with much smaller crowds blamed on a combination of bad weather and the rival Black Friday discounts offered in November. A total of £3.7 billion was expected to be spent in the Boxing Day sales, that's according to Barclaycard, with 4 in 10 UK adults predicted to spend an average of £186 each. But by the closing time on the 26th, retail experts suggested visitor numbers were around 10% down on 2018 last year. Retail analysts said the 9.8% drop was the biggest since 2010's Boxing Day, when the UK economy was, of course, at a virtual standstill. The drop is thought to be much bigger than anticipated. It seems like the steam was taken out of Christmas by Black Friday. This year, in particular, retailers slashed prices on the so-called Black Friday in a bid to tempt out shoppers who were reluctant to spend given the uncertainty around Brexit and the 12th of December general election. Major stores such as Marks & Spencer's and John Lewis also started their online sales on Christmas Eve, removing another reason to brave the weather. So all in all, Boxing Day, not a good time for retailers.
Interesting, Simon. That means you folks had enough shopping time, Black Friday and all of that. Then you just stay home cozy on Christmas and Boxing Day and not going to High Street. Those folks must have been feeling the heat. So if you take that onto corporate news world for the UK, it looks like it's a bit silent on the political and the Brexit front. But are there corporate news as folks try to wrap up the year? Is there any news in the headline from the business world?
Yeah, I think in terms of businesses, if we just focus again on the high street, retailers have come under fierce pressure this year, as in past years, from rising costs and online competitors over the past year. And that's increased the recent turmoil facing UK high streets, as well with Brexit and the uncertainty surrounding that and getting staff. So just to sum up quickly, over the last 11 months to the end of November, 81 UK retailers have fallen into administration. That's according to data from KPMG. Some of the big names include Jack Wills, which went into administration in August before it was snapped up by the retail tycoon Mike Ashley. Debenhams then entered administration back in April as it sought to reduce its debt. The biggest name, obviously, Thomas Cook, which collapsed a few months ago but was then bought by rival Hayes Travel. A UK high street brand that's also in difficulties right now is the manufacturer Whirlpool, which makes washing machines. 500,000 of the appliances in the UK homes are being recalled, throwing the company into a fresh saga over the potential danger in the items that they make and sell. The machines were sold for more than 5 years, but their door locking systems can overheat, creating the risk of fire. And the company says around 79 fires are thought to have been caused by the fault, which develops over time. And due to the scale of the problem, owners have had to find other ways of cleaning their clothes this Christmas. Whirlpool's website, once it buckled under the weight of consumers frantically trying to find out if their washing machine needed to be recalled. At the same time, customers have been struggling to get through to the company's helpline. Whirlpool apologised for the problems, and its Vice President of Communications and Public Affairs said on Wednesday that the recall was now up and running. So generally for retailers, I think, and corporate retailers on the high street, it's been a tough year, especially due to Brexit and obviously the rise of online. You know, Amazon doing so well at the moment is really the cause of their problems.
Very, very interesting. I'm sure at this time of the year, most of the corporate news from around the high streets, as you talked about, I'm sure the big companies are winding down, as it were, and trying to look into the books. This is the period for the high street businesses. But again, if you take that to Market Street, in terms of where I checked in about a couple of an hour or two earlier, the London FTSE 100 was in the red territory. Where is it at the moment?
Yeah, London's main index rose for the 11th straight session on Friday as trade-sensitive stocks cheered further positive signals from the US and China over signing a Phase 1 deal. The FTSE 100, which is on its best run of gains in 3 years, added 0.2% by opening this morning. The mid-cap FTSE 250 was flat but hovered close to its record high as trading volume remained thin in a holiday-shortened week. The FTSE All-Share Index is currently up by 9 points. That's a 0.22% rise. Meanwhile, the pound is doing okay today too. It is down by 0.05% on the euro, but slightly up on the yen and the US dollar, and we'll have more news on the stocks and shares later today.
Yes, at 1:30. We'll be sharing that together at 1:30 p.m. So let's get together after lunch for that. Thank you so much, Simon Pusey, business correspondent out of our London studios. Thank you so much for coming through on the program.
Thanks a lot, Bosun.
Today is Nigeria's first trading day after Christmas and Boxing Day. How did we finish off on Friday when the market finished off at 12:30 on the day because of the next day, Christmas holiday? Today is going to be full trading day until 2:30 in the afternoon. Bring it on. Let's show you the market softens on the final trading day for before Christmas. That was a Tuesday, 0.9%, just about 0.1%. The market is trying to hold on very tight to the 26,000 index reading, trying not to lose that into 25,000, at least before December the 31st. This is where we are at the moment. The market is doing less than 13 trillion, most unlikely between today, Monday and Tuesday to get the 13 trillion back, but never say never. When you're looking at the marketplace, you never can tell who wants to do last minute stock market shopping. Take that away. This is the volume. Again, if you look at 324.4 million share transactions on Tuesday. That tells you that the bargain hunting spirit is still at the marketplace despite some profit booking. And if you see the rest of the data there. But if you look at the sectoral position in terms of the big 5 sectors we track representing the rest of the marketplace, banking was 0.04%, trying to keep its head above the waters. Consumer goods, 0.13% in the positive territory. Industrial goods finished flat, but insurance was down by about 0.75%. Again, that's the sector you must keep a permanent eye on moving into 2020. That's my simple advice. Keep your eye on the insurance sector. Everyone is watching the regulatory new capital raising and the levels they need to meet a new business horizon effective June 2020. We're 6 months to that deadline and a lot is happening in the insurance subsector. If you haven't taken note, this is that advice. Oil and gas, 0.31%. And where did that come from? Of course, Forty Oil and the rest were trading a little bit flat on Tuesday. But again, Oando continued to ride that positive reading, and this will most likely continue to the rest of the year, and this is all in the news. That's, again, you have Japol, which also came through with 10% daily max uptick on Tuesday. The NESD finished off flat on the day before Christmas, and that's a bit of a lackluster, very small volume, less than 200,000 units from the unlisted securities market. The NSI is still trying to find its way back to the 700 reading. Will that happen in the next trading sessions? Before 1st of January? I don't know. But keep your eye on Channels Television. We'll update you on that. Let's finish off very quickly at the fixed income market. I'm looking at the NTB right now, and on Tuesday, there was a bit of a surprise uptick to double digit in the Treasury bills maturing 18th of June 2020 and the 11th June 2020 also being priced around 9.4%. Are we seeing a comeback of a double digit in the NTB space? That's the question we'll be putting through next week and try to find out what's going on. The open market operation is you're looking at the 4 most actively traded on Tuesday. That's how the market will be restarting today, the final trading day of the week. I am Bosun Namafaya. I'll see you again on Monday with another edition of Business Morning.